In the book Get Rich with Dividends, author Marc Lichtenfeld emphasizes the importance of investing in dividend-paying stocks. He warns against the common mistake of sacrificing steady dividend payments for the potential growth of a stock. Lichtenfeld shares his own successful investment strategy, the perpetual income portfolio, which focuses on stocks that provide consistent and rising dividends. He debunks the belief that the average investor cannot outperform the market and provides a step-by-step system for finding great companies that pay dividends. Lichtenfeld's book is praised by financial experts for its valuable insights and practical advice. By following his guidance, readers can build wealth consistently and enjoy the benefits of a perpetual money mission. In the book Get Rich with Dividends by Marc Lichtenfeld, readers are introduced to a proven system for earning double-digit returns. The book focuses on the power of dividend stocks and how they can help investors achieve financial success. Lichtenfeld shares his personal experiences and insights, making the book an engaging and relatable read. He explains why dividend stocks are a smart investment choice, highlighting their ability to provide steady income and keep up with inflation. The author also introduces the 10 minutes 11 minutes 12 system, a simple yet effective strategy for selecting dividend stocks. He discusses the importance of perpetual dividend raisers and how to identify them. Lichtenfeld also delves into the performance of dividend stocks compared to other investment options, such as bonds. He explains why companies raise dividends and the signals it sends to the market. The book also covers topics like setting up a dividend stock portfolio, using options to enhance returns, and investing in foreign stocks. Lichtenfeld provides practical advice and tips throughout the book, making it accessible to both novice and experienced investors. Overall, Get Rich with Dividends offers a comprehensive guide to earning double-digit returns through dividend stocks, making it a must-read for anyone looking to build wealth and achieve financial. In this chapter, the author discusses the criteria for picking dividend stocks that will generate high yields and average annual returns over a 10-year period. The three important criteria are yield, dividend growth, and payout ratio. The author emphasizes the importance of not chasing yield and instead focusing on a high enough starting yield to reach your goals. Dividend growth is also crucial to maintain the buying power of the dividend over time. The author recommends looking for stocks with a payout ratio of 75 or less, unless it is a BDC, REIT, or MLP. The chapter also provides formulas and tables to help calculate the potential yields and returns based on different scenarios. The author concludes by discussing when to sell a stock, such as if there is a significant increase in the payout ratio, decline in cash flow or earnings, or a change in dividend policy. Overall, the chapter provides valuable insights and guidelines for investors looking to generate income and wealth through dividend stocks. In this chapter of Get Rich with Dividends, the author discusses the benefits and drawbacks of using DRIPs, dividend reinvestment plans, and direct purchase plans to reinvest dividends. The author emphasizes the importance of reinvesting dividends to build long-term wealth and recommends finding a broker that does not charge fees for this service. However, not all brokers offer the same options, with some not allowing the reinvestment of dividends from foreign stocks. The author also mentions Scottrade's flexible reinvestment program. The author then discusses the advantages and disadvantages of using company DRIPs and DSs. While these plans offer convenience for those who prefer to deal directly with the company they are invested in, they often have higher fees and commissions compared to brokers. The author provides examples of companies like Altria and Clorox that charge fees for reinvesting dividends or purchasing stock directly. However, there are some companies that offer discounts to shareholders when reinvesting dividends, such as Aqua America and Healthcare Realty Trust. The author advises investors to carefully consider all fees and discounts before deciding whether to use a DRIP or DSPP. Overall, the author recommends using a broker for dividend reinvestment due to the convenience and lower costs, unless there is a significant discount offered by a company. The chapter highlights the importance of automatic reinvestment and the power of compounding dividends in building long-term wealth. In the book chapter Using Options to Turbocharge Your Returns, the author explains how options can be used to boost investment returns. Many investors are hesitant to trade options due to the perceived complexity and risk involved. However, the author argues that by selling options, specifically covered calls, investors can minimize risk and potentially earn double-digit returns annually. The chapter begins by providing definitions of put and call options. A put option gives the buyer the right to sell a stock at a specified price, while a call option gives the buyer the right to buy a stock at a specified price. The author then uses an example of buying a call option on Microsoft stock to illustrate how options work. The author goes on to explain the strategy of selling covered calls, which involves owning shares of a stock and selling call options against those shares. By selling covered calls, investors can generate income from the premiums received and potentially profit from the stock's price appreciation. The author emphasizes the importance of actively managing covered call positions and monitoring the market. The chapter also briefly discusses selling naked puts, which involves selling put options without owning the underlying stock. While this strategy can generate income, it carries more risk than selling covered calls. Overall, the chapter provides a clear and concise explanation of options trading and how it can be used to enhance investment returns. The author's engaging writing style and relatable examples make the topic accessible to readers who may be new to options trading. In this chapter of Get Rich with Dividends, the author discusses the benefits and risks of investing in foreign stocks. He explains that foreign dividend payers, particularly in emerging markets, can offer higher yields compared to American companies. However, these higher yields come with higher risk, as the stock may be mispriced or Wall Street may perceive it as riskier. The author also introduces the concept of lumpy dividends, where foreign companies may have inconsistent dividend payments due to currency fluctuations. He emphasizes the importance of understanding the risks involved in investing in foreign stocks, such as political, economic, and regulatory risks. Despite these risks, the author suggests that foreign stocks can be a good addition to a diversified portfolio, as they can provide higher yields and potential capital gains. However, he advises caution in not overweighting the portfolio with foreign stocks and recommends focusing on perpetual dividend raisers as the main component of the dividend portfolio. In this chapter, the author reluctantly addresses the topic of taxes. He admits that taxes can be complicated and that he is not a tax expert. However, he provides some basic information on dividend tax rates and how they may be affected by changes in tax law. He also discusses the concept of foreign taxes and how they can be credited on U.S. taxes. The author advises readers to consider holding dividend stocks in tax-deferred accounts and explains the benefits of doing so. He also mentions the possibility of special dividends being paid before tax rate hikes and suggests looking into stocks with strong insider ownership. The chapter concludes with a reminder to seek advice from a tax professional and a call to put the strategies in the book to work in order to achieve financial independence. In this chapter, the author expresses his gratitude to various individuals who have supported him throughout the writing process. He thanks his family members, including his parents, sister-in-law, and children, for their understanding and patience. He also expresses his appreciation for his editor and friends who have provided advice and guidance. The chapter then provides an index of topics covered in the book, including company acquisitions, activist investors, dividend growth, and tax consequences. It also includes a list of specific companies mentioned in the book, such as Thring Company, AFLAC Inc. The chapter concludes with a note from the author thanking his wife for her support and dedication. In the book chapter Get Rich with Boring Dividend Stocks, the author explains how investing in dividend stocks can lead to significant wealth accumulation over time. The chapter emphasizes the power of compounding dividends and the importance of understanding basic financial concepts. The author starts by discussing the benefits of reinvesting dividends, which can generate impressive returns. They provide an example of tripling your money in 10 years by owning stocks that go up less than the market average. By reinvesting dividends, an investment of $10,000 can turn into $32,028 in 10 years and then nearly double to $62,000. The chapter also highlights the importance of financial literacy and understanding the concept of compounding. Lack of financial literacy can lead to lower net worth and being unprepared for retirement. The author encourages readers to have a clear understanding of basic concepts so they can make informed decisions about their investments. The author then discusses the drawbacks of actively managed mutual funds and the benefits of investing in dividend-paying stocks. Actively managed mutual funds often fail to achieve average market returns and come with high expenses. On the other hand, investing in dividend-paying stocks through a discount brokerage can save on fees and potentially generate higher returns. The chapter also addresses the misconception that boring stocks produce boring returns. The author explains that low volatility and low beta stocks can offer high average returns and small drawdowns. They provide examples of well-known companies with low betas that have outperformed the market over the years. The chapter concludes by emphasizing the importance of long-term investing and the power of compounding. The author encourages readers to start investing early and consistently reinvest dividends. They provide tables showing the potential returns of different investment scenarios, demonstrating how an average annual return of 10 to 15 can lead to significant wealth accumulation overall. The chapter promotes the idea that investing in dividend stocks can be a reliable and effective way to build wealth. It encourages readers to prioritize financial literacy, understand the power of compounding, and take a long-term approach to investing. In the book Get Rich with Dividends, the author introduces a strategy called the 10 minutes 11 minutes 12 system that aims to help investors achieve high yields and double-digit returns in the system focuses on investing in conservative stocks with a track record of taking care of shareholders. By following this system, investors can potentially earn an average of 12 per year, which can significantly grow their portfolio over time. The book covers various topics, including why dividend stocks are the best long-term investment, how to select the right stocks, and the importance of dividends in determining the health of a business. It also discusses different types of stocks that yield more than regular dividend payers and provides insights on dividend reinvestment plans, foreign stocks, and options to maximize return. Additionally, the book addresses the subject of taxes and offers tips on making investments more tax efficient. The author shares personal endorsement by using the 10 minutes 11 minutes 12 system for their own investments and their children's money. Overall, Get Rich with Dividends aims to empower readers to achieve financial freedom and enjoy a free retirement by following the 10 minutes 11 minutes 12 system. In the book chapter Why Dividend Stocks, the author emphasizes the importance of investing in dividend growth stocks. He presents a simple and easy-to-learn system for investing in these stocks, which can generate significant yields and average annual returns for your portfolio. The author also highlights the long-term benefits of dividend investing, such as securing future income and wealth, and provides statistics on the low savings rates of American workers. He debunks the myths surrounding other investment strategies and explains why dividend stocks are a conservative and lucrative way to generate wealth and income. The chapter concludes with an introduction of the 10 minutes 11 minutes 12 system, a simple and inexpensive method for achieving 12 annual returns through dividend investing. Overall, the chapter aims to educate readers on the benefits of dividend stocks and provide them with a practical system for achieving financial goals. In this chapter of Get Rich with Dividends, the author discusses the concept of perpetual dividend raisers. These are companies that have a long history of increasing their dividends every year. The author introduces the concept by comparing it to reading stock charts and identifying trends. Just as a stock will continue moving in the same direction until something changes, a company that consistently raises its dividends will likely continue to do so unless something prevents it. The author then introduces the concept of dividend aristocrats, which are companies that have raised their dividends every year for at least 25 years. These companies are typically blue-chip companies with a long history of growth. The author uses the example of Genuine Parts, a company that has increased its dividend every year since 1956. This demonstrates the stability and reliability of these types of companies. The author also discusses the dividend champions, which are similar to the dividend aristocrats but are not required to be part of the S&P 500. These companies have also raised their dividends for at least 25 consecutive years. The author explains that these companies may offer higher yields and growth rates compared to the dividend aristocrats. The chapter also discusses the dividend achievers and contenders, which are companies that have raised their dividends for 10 or more consecutive years. These companies may offer even higher yields and growth rates compared to the dividend champions. The author emphasizes the importance of individual stock selection rather than investing in dividends or funds. He explains that individual stocks offer more control and flexibility, and there are often higher yields available in individual stocks compared to IPs. Overall, this chapter provides valuable insights into the concept of perpetual dividend raisers and highlights the benefits of investing in companies with a long history of increasing dividends. In this chapter, the author discusses the performance of perpetual dividend raisers and compares them to other investment options such as mutual funds and bonds. The author emphasizes that companies with a track record of increasing their dividends every year tend to continue raising them in the future. The compounding of dividends is highlighted as a key factor in building wealth in the stock market. The author also explains how reinvesting dividends can protect investors and allow them to profit even in bear market. Additionally, the chapter addresses the common misconception that individuals are better investors than professionals and provides evidence to support the idea that most investors can. Overall, the chapter emphasizes the benefits of investing in perpetual dividend raisers and highlights their strong performance compared to other investment options. In this chapter, the author explores the reasons why companies raise dividends. He explains that there is often a difference of opinion between management and investors on what to do with the cash on the company's balance sheet. Management wants to keep the cash for acquisitions and growth, while investors usually want. The author uses the example of a restaurant to illustrate this point. He also discusses the case of Microsoft, which didn't start paying a dividend until 2003 despite having a large amount of cash on hand. The author then delves into the debate between management and shareholders on who can earn a greater return on investors' money. He explains that management teams believe they can put the money to good use, while investors argue. The author also discusses the difference between stock buybacks and dividends, explaining that buybacks can be used to manipulate earnings and are often used to offset employee stock option plans. He argues that a strong dividend policy is a sign of capable and confident management. The author concludes by discussing the importance of dividends in attracting the right shareholders and sending signals to the market. He explains that companies that raise dividends year after year tend to outperform the market. Overall, the chapter provides insights into the motivations behind companies raising dividends and the impact it has on shareholders and the market. In the book chapter, Get Rich with Boring Dividend Stocks, the author explores the power of investing in dividend stocks and the concept of compounding dividends. The chapter emphasizes the importance of financial literacy and understanding basic concepts in order to make informed investment decisions. The author explains how reinvesting dividends can generate significant returns over time, even if the stock price doesn't experience significant growth. The chapter also discusses the drawbacks of actively managed mutual funds and the hidden costs of fees and expenses. The author provides examples and tables to illustrate the potential returns of dividend stocks and the benefits of long-term investing. Overall, the chapter encourages readers to consider the benefits of investing in dividend stocks and the potential for long-term financial growth. In this chapter, the author discusses different types of stocks that offer higher yields than typical dividend stocks. These include closed-end funds, real estate investment trusts, REITs, business development companies. The author explains how closed-end funds work, where the price of the fund is determined by supply and demand rather than the value of the assets. The author also discusses MLPs, which are companies that pass along most of their profits to shareholders in the form of distributions. The author explains the tax benefits of investing in MLPs and the potential risks. The author then discusses REITs, which are companies that own and operate real estate properties. The author explains the tax implications of investing in REITs and the potential risks. The author also discusses BICs, which are publicly traded private equity investment firms. The author explains the different types of BICs and the potential risks and rewards of investing in them. Finally, the author discusses preferred stocks, which are a combination of bonds and stocks. The author explains how preferred stocks work and the potential benefits and drawbacks of investing in them. Overall, the chapter provides an overview of different types of stocks that offer higher yields and discusses the potential risks and rewards of investing in them. In this chapter, the author emphasizes the importance of diversifying your portfolio and not relying on one specific investment to make money. He explains that a well-diversified portfolio should include a mix of stocks, bonds, real estate, precious metals, and other investments. The author uses the example of the 2008 financial crisis to illustrate how diversification can help balance out losses in one asset class with gains in another. The author also discusses the importance of diversifying within asset classes. For example, if you own rental properties, it's important to spread them out across different locations to minimize risk. The same principle applies to stocks and mutual funds. It's important to diversify across different sectors and yields. The author provides examples of different portfolios and their diversification strategies. He also explains the concept of yield and how it should be considered when selecting dividend-paying stocks. The author emphasizes the importance of dividend growth rate and payout ratio when selecting stocks. Lastly, the author discusses special dividends and how they should not be included in dividend growth calculations. He advises investors to consider special dividends as a bonus and not rely on them for future income. Overall, this chapter provides valuable insights into setting up a well-diversified portfolio and selecting dividend-paying stocks. The author's engaging writing style and real-life examples make it an enjoyable read for both novice and experienced investors.